Ladies and gentlemen, Gay Kim here. Welcome to the market update. Hope you guys had a good day trading today. Looking forward to the weekend. It looks like S&P closed the day with about 0.2% gain today, but it looks like we are up 13% year to date on the S&P. Let's check out these yearly or year to date numbers on these weekend videos. Spider up 13%, Nasdaq is up about 8% there, Dow 13, Semi 14, 15, small caps 17% year to date, transport is 20, banks still leading the market with the 26% year to date numbers there, energy's up almost 46, biotech and emerging market up about 7% each. We got gold and silver kind of struggling this year, but making a progress though last couple of months. Oil is up about 45% along with the energy. Dollar is pretty much flat all year long. Treasury bond is down 10% this year. Treasury bonds been down for more than a year now. VIX is down about 30% this year, and the miners up 8%. Compared to gold, as you can see, gold is negative or flat pretty much this year, but looks like miners is finding good traction there, and that could be a good sign for the gold and silver to kind of catch up later this year. And it looks like Bitcoin is down 5% year to date. However, it is still down about 50% since the peak. Let's in tonight's this weekend analysis, we're gonna be sticking with three tickers today: Spider, GDX, and Grayscale Bitcoin. It is all coming up right now. All right, let's go to the 65-minute chart here real quick, and let's talk about today's price action. Not a whole lot's been happening this week. It's pretty lethargic, choppy, up and down. It's interesting to note that it's been gapping up almost every single morning, but end up fading towards the midday and then grinding back up towards end of the day. That has been the story this entire week. But nonetheless, we have to respect the fact that the market continues to cultivate higher highs and higher lows in the short term. And when the market is doing this, we want to what? Give benefit of the doubt to the buyers. And this is the reason why almost every single day towards the end of the hour, except the Wednesday, we can see that on Wednesday we faded all the way down, but you can see today we made an up move towards the end of the day. You can see yesterday got back up midday, and then here got back up on Monday or Tuesday also. So we are printing new all-time highs though, and that's always a good sign here. If I go to line chart, you can see it more clearly, definitive. Closing basis, we have printed new all-time highs at 424.32. So that's a good sign. Overall trend is up, so we want to continue to give benefit of the doubt to the buyers. We got this current pivot as potentially, or it is acting as new support. Obviously, you can see the resistance there, support, and that's where we found support today. And this is a secondary pivot, prior resistance, support. And then you can see my short-term moving average is residing just underneath that first pivot there, just about 422.52. Kind of guarding that vicinity. So as long as the market and the price continues to cultivate and establish higher lows and higher highs, we're going to continue to give benefit of the doubt to the buyers in the short term. As long as the market continues to respect and stay above my short-term moving average, we want to continue to assume that any kind of pullback potentially could be met with another upturn in the short term, right? And so not a whole lot to talk about this week just because, market has been so lethargic, very choppy. So let's get right into the oscillator and see what we can find out here. So it's not enough. We've been seeing a lot of these whipsawing action here. We saw this whipsawing action, I think, Was it earlier this morning or late last night? But today, towards the end of the day, another kind of a neutral look there. Again, we don't know much out of this. It hasn't fully crossed. I mean, we saw a little cross here, but then it whips out back in. So what we need to see is a full cross. That's what we need to see, full cross, right? And another thing is positive is the market is cultivating higher lows and higher highs here. While the oscillator trying really hard to make a move to the upside, just haven't found any good traction. That's what this oscillator is telling us, is that we're not finding traction. We're seeing these choppy, lethargic move, but we're not finding traction until we see some good looking traction and the oscillator is looking healthy and competent, right? It's difficult to forecast, you know, when we're going to see that strong up move, or is it going to be on the next downturn before we see that actual breakout, right? And overall, for me, if you ask me what I think about it, you know me, I'm a trend guy. I like to stick with the trend. I don't like to go against the trend. I don't like to call things, you know. So I want to continue to kind of assume that if we do see a breakout, you know, we will see a breakout, you know, after maybe some grinding move, right? And that's kind of, and so this is I'm not putting in any short trades, obviously. I'm not putting in any new trades up here either, but I'm still holding a lot of my longs, and I'm holding this entire year and haven't closed out any of it, and just kind of looking forward to the next smooth breakout that could potentially get us to 450, 460 before I unload any of those. And so, yeah, overall, I think the trend is, the oscillator is telling us kind of a pretty neutral stance, but then overall price action is bullish. So I do want to give benefit of the doubt to the buyers going into next week. We do need to see a follow through. Instead of these chop all day long type of move, we need to see a one good follow through day. If we do see something like that, you will see the oscillator looking a little bit more confident and spreading to the upside. If not, if we do see some sort of shenanigan down move, we wake up on Monday morning, market is down 1.5%, which is all possible. Obviously, make sure to check 421 and this gap area as potential support. Obviously, buyers want to protect this gap. Bears want to go up and go down and fill that gap. Let's go back to the daily chart and quickly observe the long-term trend as the market is processing with these ups and downs and volatility. So last time we saw any kind of meaningful correction was back in August and October. This was a prior, the election months, right? There's a lot of jitteriness, uncertainty, what's going to happen. Is Trump going to run for the second term? If Biden wins, is the market going to crash down? That was that nervousness. That was that jitteriness. That was that uncertainty. And it gave us a tremendous opportunity, because if you did get in and you're in this vicinity, I mean, Spider's at 320 now, 424, and there are a lot of stock that broke out. The market, we saw 2 weeks. Do you understand that from November until today, what is it, June? That's 7-8 months later. And in those 8 months time, we only saw 2 weeks. Let's call it 3 weeks. 3 weeks of smooth, bullish run. Let's call that 4 weeks. So 4 weeks. So out of 8 months, we only had 4 weeks, which is 1 month smooth rally. And all other 80%, 90% time, market was just choppy all day, every day, making everybody get whipsawed. You know what? Who truly made money from here to here? It's the long-term investors, it's the position trader, it's those traders who stuck with their position, held it long-term, right? It is the well-balanced portfolio, because I say well-balanced portfolio because during those volatile, choppy, lethargic, shenanigan days, there will be some sectors making a move. There are some sectors not. So a lot of these hyper stocks, a lot of these COVID stocks been struggling. They've been crashing down 40, 50%. Amazon done nothing the last, almost 9, 10, 11 months. But there are some of those value stocks that didn't make a move. We're talking like financials and transport. I can think of like Google, American Express, FedEx, and even a lot of those bank stocks, Goldman Sachs, because the bank stocks were like lagging heavily, even back in September and October. A lot of when those hyper stocks were making a huge move, there are a lot of lagging stocks. So, when we saw that actual opportunity here back in October and November. So the best strategy would have been to accumulate those value stocks that were making a move and then start rotating that funds from the hyper stocks. Because remember, if you got in Amazon back in, I don't know, July, anytime after July, you ain't making any money a year later, right? You got in any of those hyper stocks. We're talking Tesla, we're talking Baidu, we're talking Alibaba, we're talking Zoom, we're talking DocuSign. What else is there? Roku, Spotify. If you got in any of those, and Netflix, any of those hyper stocks back in mid to late last year, well, those been crashing down quite a bit. So those were, but they were a handful of sectors were lagging while the hyper stocks gone up. And they made that move. That's what I mean when I say only the well-balanced portfolio truly able to, benefit from this move. Because it's S&P was choppy. A lot of these big indices choppy. Even large tech stocks were pretty choppy, not making a move. And so, and it's extremely difficult to pick perfect sector and always picking perfect sector. I'm just going to go in when this sector is about to move. I'm going to go, nobody can do that, right? So it makes sense kind of diversify it, especially in this kind of climate, and then ride that all the way, not trying to call top, not trying to, get in and out. But I think just because the market has been so choppy, just because there's only selected sectors and selected stocks made a big move here, and I think that's why holding through, through these up and downs, that strategy been working out well versus shorter term trading, in and out, overnighting, scalping, putting too much hedges, and trying to time things. None of those strategies worked out nearly well or fatal in the last pretty much entire this year, right? Just because, a lot of the swing trading strategies works well when the market is trending, but they are detrimental when the market is choppy like this, right? So it's not a whole lot to talk about at this point. Just market has been, it hasn't done really much since my last weekend analysis, but remember, we are still staying above both of my moving averages here. This moving average does have an impressive resume, so we want to respect it. We want to give benefit of the doubt to the buyers. Quickly, I want to share with you though real quick. This is a daily chart oscillator. You've seen my oscillator on 65-minute chart. It looks like we're not fully overbought yet. We got a little bit of room. You can see maybe this is looking something similar to here, right? Because you can see that little kind of pullback there, right? And then you can see this thing kind of wasn't fully there. Like we didn't hit overbought yet. You can see we got a little bit of room, and then we did get into that smooth rally. So I don't know, maybe we see a little pullback and we go up, or we go up straight from here. That I don't know, but maybe we're setting up something similar. We'll find out. But you know what though, as you guys know, I'm not a short-term trader, I'm not a day trader, I'm not a swing trader, I'm a position trader and a long-term investor. And so it's been pretty choppy and grindy day-to-day basis, but looking at things overall this year to date, things have been pretty good. Things have been pretty good for those long-term investors, I would have to say, and position traders. Let's go to miners here. So miners, so you can see that's what I was talking about on those daily update videos when I was mentioning gold. I was talking about that, hey, the gold and silver and the miners, they had a pretty good, nice rallies last couple of months, and recently we're kind of coming down, and I think it's not too bad. See if we can get back up here. So we do have these higher lows and higher highs, but I think the most important part of it is that we got up here and did make that for the first time that higher high, right? This is the first time ever since this entire downturn, right? This definitely that's a higher high there. So now market is in a discovery phase to kind of figure out where that higher low is going to be. Is it going to be here, or is it going to be here, or is it going to be here? See, that you don't know, I don't know, none of us knows? We have to find out what the market is going to give us and then react to it. But I am overall bullish. I am pretty, enthusiastic about where the gold and silver and the miners are going to go this year and probably even next year. So I am bullish on those. I've been accumulating, as I've been talking about in my weekend analysis, weekend edition analysis videos, that I've been accumulating at these levels. I didn't find perfect bottom. I actually started going long here, and then again, because I'm a long-term trader and a long-term investor, I'm more lenient. So I went through that drawdown, and then. And then I actually accumulated more in these vicinity, and then obviously I was able to kind of gain back some of that. And so I actually I was kind of happy about that, because I felt like I could maybe add more. And so that gave me opportunity to do that, and then made a move. And right now I'm just kind of watching and see how the market is going to, are we going to bounce here? Are we going to come back down lower, right? So it looks bullish to me. And let's go to 65 minutes, because I just saw something interesting on 65 minutes on GDX here, something interesting on the moving average. To show you guys real quick. Where is it? There you go. So that pink moving average there. So this is GDX 65 minute chart. You can see that moving average clusters here, and then you can see that moving average of holding. So that moving average does have some impressive resume because of this, right? Because we found support in that vicinity. But keep in mind, we may lose it, but we have that blue line, right? So if we lose it, the next turn is where? 37 or so. That does have impressive resume also, right here, resistance, support, and potential support. So for me, I don't really care either way. If this thing bounces from here, nice, because I already have my longs, and I don't mind them gaining momentum and compounding and getting that return. Or if it pulls back, hey, maybe I'm thinking to maybe add more, something like that. We'll see. There's a whole lot of options when you do get into a good level for your entry. So let's go to Bitcoin here real quick. So Bitcoin still facing about 50% or so decline. This gap here, that might be something, because we gap, and I'm going to kind of concentrate on this gap before I let you guys go in this video. So you can see in this gap, that was that up gap, and that gap opened here. That gap was protected. It was never filled. You can see right here, that gap was never filled. And then we gapped down through it. So we never touched that gap. Here, I'm going to zoom in. See it better. So you can see that this gap was never touched, and then on Monday we gapped down through it, so then this became an island top reversal gap. But then we gapped right back up on Tuesday or so. It looks like turned this into a island. So many people probably asking, okay, is that gonna be major bottom then? That's gotta be some sort of strong reversal signal. Okay, we got that back-to-back island top, but then now island bottom, and we're holding above it. It could mean something, but I'm not sure if it's enough yet. And also, obviously, Bitcoin trading 24 hours, it's not a real true gap. It's just grayscale Bitcoin, but it could mean something. But you can see, as far as the momentum, it takes time for that momentum to change. Even that up momentum, you see how long it took that up momentum change it to down momentum, right? Because it took February all the way to, so it took 2-3 months. So you see, it took 3 months for that uptrend to be dismantled and then start making those lower highs. So it might take some time. You can see all these moving averages still declining here. So I want to give benefit of the doubt to the sellers. And you might ask me, okay, what price action are you looking for potentially turning this into a bullish scenario? Well, if we can see this thing getting up here in a perfect world and start coming back down, and then you see these moving averages here coming up, you can see these moving averages start crossing back up like this, and it could come down a little lower, something like that. If we can see something like that, I mean, your entry could be maybe somewhere over here for that, that lower low turning into higher low, becoming this equal highs. Maybe even turn to some sort of inverted head and shoulders. If we see something like that and break above the neckline, I think if we see something like that, I'm not saying, who knows how this market is going to play out. So it's going to take months before we kind of see, okay, great, the Bitcoin is shifted back to bullish, right? So that I would have to see some of these moving averages start to kind of curl back up, and then the price start, making these higher lows and higher highs. So unless you're, you just want to gamble it here, start going long here, and looking for that kind of a YOLO play. Yeah, it's I don't know. With grayscale Bitcoin, it's a little bit difficult, to do that, because you don't know what this could possibly do, because you know that Bitcoin has a track record of crashing down 70-some%, which we did last year, and then 2019 it crashed down 90-some%. So it's because of that kind of track record. Like, let's say like Google, right? Let's say Google comes down like 30% or something like that. Oh yeah, that's you can buy that dip, and you have a high probability of turning that thing around, because last time we saw Google seeing anything more than 30%, let's exclude COVID, right? Because of COVID, everything went down. But before COVID, last time Google went down 30% was 2012. So you can see, for, let's say you're trading this quality stock such as Google, and you see Google coming down 15-20%, you buy that dip, it's pretty safe. And I'm using two extremes here. We got the really, you got the really like this hyper risky asset class like Bitcoin versus very quality, we have very well established company like Google. I'm just looking at the opposite point of view, the extreme cases on both side. And so that's kind of what I mean. Like, you want to a YOLO here. Maybe it's gonna work out for you, and that's not the type of trade that I will get into. So I haven't been long since I've closed out all of my longs up here on Bitcoin, and I'm just I lost interest, and I wouldn't short either. I just been watching here. So let's see how the market plays out. But I'm not too enthusiastic about this. I think there's so much better setups out there that you can kind of get into. But I know Bitcoin is very popular among most retail, especially the new traders, the younger traders. And that tells you about something, right? Because a lot of young traders love Bitcoin. So that tells you the emotional chaos and crisis that these guys go through trading Bitcoin every single day. You guys enjoy the rest of this weekend, and good luck trading next week.